Hello, welcome to this month's Any Answers Answered, where Tim Good and I take a couple of the tips, or questions I should say, from the Any Answer section of accountingWEB and hopefully put some meat on the bones of some of the replies they've already had and some of the thoughts that haven't been offered. We start this month, Tim, with a question from somebody who had previously asked a question actually in this section, Clint Westwood, whether it's his real name or not to be confirmed. And he asked about FHL losses. And one of the problems here is that if you have FHL losses, in theory, I think they should just be carried forward these days. You might have other losses relating to property as well. Can you put them all together, or do we have to keep them completely separate?
Separate. Furnished holiday lettings were tightened up back in 2011, I think. And since then, losses in an FHL are ring-fenced and can only be set against profits in an FHL business or carried forward against the profits in the FHL business. And they can't be offset against any other income. So if you have ordinary lettings, a property rental business involving furnished and maybe unfurnished lettings, those profits in the ordinary letting business can't be reduced by the furnished holiday letting losses. So the first point is the FHL losses are ring-fenced and can only be used against FHL property profits or carried forward against the future profits in the FHL trade.
Because FHL up until 2011 was always the thing people wanted to aspire to get to in terms of tax, because there were so many benefits of having it. Around about that time, all the day counting rules changed, which made it a lot more difficult to get into it being FHL in the first place. But actually, we weren't that excited once we'd got in anymore. There were a lot of the benefits, like the sideways loss relief, that had gone.
Well, that's gone. There are three major benefits of qualifying as a furnished holiday letting. The capital gains reliefs, like business asset replacement relief, entrepreneurs relief, are available as though it was a trade. That's the first. The profit from a furnished holiday letting counts as pensionable income, so it's a bit like earnings in terms of being able to support a pension premium, because the maximum pension premium is the 40,000, or if it's lower than that, your earnings. And then capital allowances on furniture, equipment, etc., which an ordinary landlord is not able to claim. But the loss is now restricted.
Okay, one other question that Clint has raised here is whether, if we're discussing the idea of it ceasing to be a furnished holiday let, if in the future that then comes back into qualifying for furnished holiday letting and we decide to resurrect that trade, if you like, is it the same trade then? Can we carry those losses across the bridge?
I don't think so. I don't think it's specifically dealt with, but what he's thinking of there is that we cease to meet the FHL conditions and no longer treat the property as an FHL, so those losses then disappear. But maybe a couple of years later, that very same property does then fall back within the FHL regime. Can we resurrect the losses? I don't think so, because I think that'll be a new trade, and if there's been a cessation of trade, and then after a period of time a new trade starts, albeit using the same asset, I don't think that would revive the losses at all. Of course, what you could do is make what's known as a period of grace election, and if you cease to meet the strict day count FHL conditions for a couple of years, you could elect, if it has previously met those conditions, for it to continue to be treated as an FHL, and that would keep the losses alive. But in the question he says specifically that they're not wanting to make a period of grace election for whatever reason. Well,
quite possibly to get those losses in the future into the pool of losses and gains with potential income with the furnished letting. Our second question this month relates to dividends, and a Peter Pace, who has asked a question relating to different classes of shares. Now, I'm immediately nervous whenever I hear anybody talking about different classes of shares, alphabet shares. I think they're fine, personal opinion. I think they're fine if you want the children to have some B shares, you want the assorted employees to have C shares perhaps, because they're very slightly different terms. But when in fact it's just a structure to pay different people different dividends, I'm always very nervous. Peter's question is, do I have to declare these dividends separately across the shares? And I'd have thought the answer is yes, you do.
Yes, you do, certainly. And his question simply is, if a company has A and B shares, is it correct that a dividend should be declared for each individual class of share, and different share classes can have a different rate of dividend? you must always look at the Articles of Association, because they'll set out what the different classes are and what the rights attaching thereto are and the treatment of dividends thereon. And typically, if you want different classes of share, they'll be properly defined in the articles, and it is then open to the directors or the company to vote different rates of dividend or dividends on one class but not on the other, and that's what we should be doing here. The answers to the question include reference to filings at Companies House, whereby you can disclose to Companies House that there are different classes of share, and you might then decide to have different dividends on them. But unless that filing at Companies House corresponds to what the articles actually say, that could be incorrect. So the starting point is look at the articles and by all means have the articles changed to clarify that the different classes of share carry different rights to dividends that can be voted at time to time by the directors or by the company.
Yeah, there's a case recently which we covered on Tax TV, which explained, it was about a guy who had thought that his other half had one share and he had one share, but in fact Companies House had been told he had two, the account showed that he had two, and there was just a lack of joined up thinking between him and the advisors.
Yeah, it's not dissimilar. Terence Rain was the case, and yeah, his accountants had said, look, if we have one share each, then we can split the dividends 50-50. They did split the dividends 50-50, but when the revenue looked at it, they didn't have one share each, and that was that. So execution and basic planning, getting it right is, again, the key.
But the answer as far as if you do have two classes of dividends, the question itself fairly straightforward. Yes, you need to make sure of this. How do we feel about Alphabet shares?
Well, your nervousness, I think, is appropriate if the Alphabet shares are issued to different employees in order to replace what would otherwise be remuneration, bonuses or regular remuneration with dividends. So employee A gets A shares, employee B gets B shares, etc. And there the revenue will clearly want to treat that under the remuneration anti-avoidance legislation. If you're looking at family members and you've got A shares for the parents, B shares for the adult children, or C shares for the minor children, there's no problem with that in terms of the restricted securities employment legislation, but we've got to watch out for the settlements legislation. And there the question will be what rights attach to the different shares, and in particular, for husband and wife shares, you've got to make sure that they have entitlement to capital. There could be non-voting, but that's a whole different story under the settlements and anti-avoidance legislation. But fundamentally, different classes of share, not a problem.
And there's an article in accountingWEB quite recently relating to exactly this point, relating to using shares to remunerate students who are heading off to university.
That, yeah, exactly.
Yeah,
right.
which is exactly where this sort of thing can be used very, very effectively. Do keep posting on any answers, and perhaps next month it will be your question that Tim and I discuss. Until then, bye-bye.